Okay, guys, I hope you're good. Welcome to Z Tutors. I've got our lesson 3 on VAT supplies, and then remember one thing, why even being specific that it's VAT supplies, because remember VAT is actually levied on the supply of goods and services by that vendor, right? So now we are focusing on what the supplies, which type of supplies are we actually levying the VAT on, right? So that's what we are focusing on today. And then we've got 3 types of supplies that we have, or actually 3 types of VAT levies that we actually charge if ever we have a vendor and stuff like that, right? So there's that, and then we're gonna get into that later on. But now let's focus. Just start with the thing with the learning objectives. You need to know basically the types of that levy. Number 1, that's your thing, your objective. First thing, identify the type of VAT levies. Then once you do know the type of VAT levies, and then also know that, okay, fine, for each and every type of thing, VAT levy or VAT supply that's there, what items that actually fall under those VAT levies and stuff like that, right? So now if ever you're going to be going into the type of VAT levies, we've got 3 of them, or supplies that we have. It's the first one is Zero-Rated Supplies, second one Exempted Supplies, and then the last one is the Standard Rated Supplies, right? So now you need to know what actually goes into the Zero-Rated Supplies. Price list, and then also the requirements of certain items actually being included in the zero-rated supplies list and stuff like that, because it's not just everything that you can just include in that list, and some things are actually excluded. As you know, SARS always has exclusions and stuff like that, right? Then you got the exempt rated supplies. That's another objective that you have to have, and then the standard rated supplies list also again, standard rated list, even though rated supplies list and stuff like that. Rated supplies list. So you need to know what items actually go into the standard rated supplies list and rated supplies list, and then the standard rated list, and the reasons why they actually fall under those categories and stuff like that, right? The items that are going to be there. And then also again, you need to know the hierarchy of the thingy, of the VAT supplies, which one starts first and stuff like that. Please ignore my typing errors and stuff like that if you want thing like hierarchy and stuff like that, right? So just ignore that. Okay. Then you need to know the hierarchy of VAT supplies. Then what else do you need? Okay, I think that's all you need. So basically, that's what the lecture is actually about on those things. And then now, once you are actually here, then you need to remember that actually on zero-rated supplies, the VAT is there's 2 types of supplies, right? In the types of supplies, right? There's levies, and then the types of supplies. There's taxable supplies, which under taxable supplies you've got the zero-rated supplies, and what you call the standard rated supplies. It's very important because sometimes people forget that certain things are taxable and sometimes certain things are not taxable supplies and stuff like that. So just remember the taxable supplies. It's always zero-rated and standard rated. The other one is just exempt. There's no VAT input or VAT output on it, right? So okay, zero-rated supplies and standard rated supplies. Then on the other hand, we've got what non-taxable. I just prefer to use the word non-taxable supplies, which is going to be your exempt items, exempt supplies, right? So now you've got your type of levies and stuff like that. Then on zero-rated, obviously they charge 0% VAT on that. So they do charge VAT at a rate of 0%. Standard rated 15% VAT rate, and then on exempt there's nothing that's been charged. So if ever now maybe you have a situation where you're inserting something on the zero rate, on the exempt rate, that maybe you're told to calculate the taxable the VAT payable or the VAT refundable to the VAT vendor. If ever now you come across a situation where you have an exempt supply, always make sure that on the right hand side on the amounts list, you either you write a dash or you write a zero to show that you know that it's supposed to be zero or dash instead of you leaving it unwritten or something like that, right? So now let's start since now, and then also let me go to the hierarchy of VAT supplies immediately before we actually go into which one, what's inside each of these VAT supplies and stuff like that, right? So now we've got on the hierarchy of VAT supplies. Let me just copy this. On the hierarchy of VAT supplies, number one, every time before, whenever you're looking at an item, you first ask yourself, is this item zero rated? That's the first thing you ask yourself. Is this item zero rated when it comes to VAT? Is it zero rated supply? Zero rated supply? As I said, this is a zero rated supply. This is based on section 11 of the Tax Act. So if you haven't read the Tax Act, you better start reading it now, even though it's not that much of a priority, right? So it's based on the section 11 of the VAT Act that you're supposed to actually start by looking at what items actually zero rated supplies. Then secondly, then before you even go to standard, you should go to exempt what you call exempt supplies. Exempt supplies. And then also that is not actually based on section 11, that's based on section 12. Section 12. Okay, perfect. So it's simple. One is section 11, the other is section 12. Don't even need to stress that much. It just follows each other and stuff like that. So those are the rules, right? So then number 3, then the last, if ever the item is not zero rated, it's not exempt, then it's most likely than not a what you call a standard rated supply, right? That 3. Standard rated supply. Right. So now once you've got all of those 3, so always ask yourself, is it this first, then this first, second, and then lastly, if it's none of these 2, then it will most likely be this, right? And then there's not even a lot of items that actually fall into the zero rated supply. So let's go into the zero rated supplies list. And also, how can I put this? Okay, I'll say it now. Okay, let me just say zero rated supplies. Then items that are zero rated, it's not a lot on the list, right? Because now you've got thing what you call your exports. Okay. You've got your exports of goods, and then also going with exports of goods. Okay, let me just go here. Oh, Jesus. Just like you've got your exports of goods, your export of thing what you call of transportation. So you see everything that's also what do you have to when it comes to zero rated supplies, always ask yourself, okay, fine, if this item is going outside the country, who is the end consumer of the item? So now it would be somebody that would be outside the country, and you have to remember that that is actually what destination is. So if ever the consumer is actually here in the country, or actually the purchaser of that particular item is actually inside the country, then they will pay the VAT. But if now the purchase is outside the country, we need to ensure that the products that exit our country are actually competitive outside the country. We need to make sure that they are cheap as possible, so that whenever the other country charges their VAT, our items can still be affordable to the other side. You understand? So that's one of the reasons why you have to put into your head why do you actually have things zero-rated supplies as items that are exports and stuff like that. So every export of goods, as long as it goes through the right proper procedure on the dedicated ports, either an airport or shipping ports and stuff like that, then everything is fine, right? So we go on that, or by a truck, that's okay also as well. So export by transport, or it's ancillary services. So ancillary services, it's any additional services that are going to be charged for exports and stuff like that. Maybe the insurance on the export can be. There's a lot of things that you can charge on export, but anything besides the transportation costs themselves, right? Those, that's what we call ancillary services and stuff like that. Ancillary services or bodyguards, whatever that you're gonna hire for that, can actually even include on that list, because now the person exporting the items overseas. Are we still together? Right? I'll be good. Let me see if I'm audible. I'm still audible. Okay, fine. And then also on the other hand, what do we have? Okay, besides the exports, you've got the thingy, the supply of gold. Okay, but the supply of gold. So now on the supply of gold, it's literally simple. Gold that is issued by the South African Reserve Bank and stuff like that. Most likely are not. You can exchange it anyway. You understand? Most likely you can exchange it anyway. You will most likely not even exchange it anyway until you return it back to the South African Reserve Bank, and then they can keep your cash, and maybe there will be that value gain on that item, on that gold coin or something like that. You'll have to go and pay capital gains on that. That's fine. But for the VAT, you're fine, because exchange of money for money, you do not get charged for VAT. And you also have to remember that money is not a good. Money is not a good, right? Even though it was on the goods are part of the act, it was stated, but it was excluded as part of the goods. So money, anything that is money to money, you do not do anything like that. You do not charge any VAT on that, right? So there's that. And then so it's the same thing with the supply of gold and stuff like that. And then you've got the supply of basic foodstuff, Then supply of basic foodstuff, guys, it's a long list. It's gonna be a lot of work for you to try and even remember the whole list. So my advice is that think of your daily essentials. Think of your daily essentials when you're looking at this particular proportion of the supply of the better items. I don't the zero-rated. Supply of basic foodstuff. Think of your daily items. What do you necessarily need on a day-to-day basis for you to survive as a human being? You don't need a non or ultra to survive now every day, do you? So you see that you need bread though. Yeah, you might need milk. Powdered milk, you might need it. Eggs, yeah, you understand. Lobster, you don't need lobster to survive now. But fish is essential for some people. You understand? So such things that you have to look at. Meat, red meat, you don't need that to survive also. You don't need chicken to survive. It's not necessary. It's a luxury, those things. You understand? So now we have to look at the basic food stuff that we actually need as a person to actually put it onto the supply of basic, zero-rated supplies of basic food stuff. So you need to think of those things. Those the food you guys call poor. I don't know. You say poverty meals or whatever you do to get those poverty meals. It's those things. Understand? So it's that. And then also to extend the list, also we have to say also sanitary pads. Sanitary pads. Plus or else glass or napkins. I don't know. Else know those things. And then what else do we have? There must be something that I'm forgetting. It's a small item. Okay, besides the meat, chicken, and pork. Okay, I'll try to remember it along the way and stuff like that. Just leave a plus. And I remember it, I'll come back to it. Right? So we got that in the supply of basic food stuff. And then also what else do we have? Also, I have the supply of fuel. And paraffin. Or you can call it illuminated kerosene, that's up to you. But then on the supply of fuel and paraffin, the main reason for that is because already there's a fuel levy that's been charged on the thing, on the petrol and stuff like that. So when you come into fuel, including your items like your petrol, your diesel, your biofuel and stuff like that, yeah. So we are including all of those as part of the supply of fuel. So now what they are doing here is that they are trying to avoid double taxing the same item. Right, you've got your RAF money being deducted from the fuel, you've got your fuel levies, everything that's been charged on the fuel and the paraffin. So to avoid it being double charged, they're actually saying, okay, fine, let's just make this thing zero rated. And then regarding the paraffin, right, if ever you are going to use the paraffin, or specifically on the paraffin, if ever you're going to use the paraffin specifically for illuminating, which is what lighting, and then also for heating, it is going to be zero rated. But should you actually end up mixing it with another item before using it, then it's going to be standard rated. So now your only question will be, how will SARS know? They won't. As long as you don't order the items mixed already and you're going to mix them yourself, then they won't know what you're going to be using. Then you can actually go and claim of that output of 0% on that particular item, right? If ever you're actually selling and stuff like that. And then, okay. And then what else do we have on this? I think this is basically the whole list of zero-rated supplies. If ever I forgot something, you guys can let me know. But I do not think there's something that I actually forgot on this. Just the specific list. There might be some items, but it wasn't an exhaustive full list. But these are the ones that you guys need to be focused on right now. Right? So basic food stuff, basic food is daily essentials, sanitary pads, liners or napkins or and stuff like that. You guys are fine. Exclude the meat, exclude all types of meat except tinned fish. And then you have sorted. Right, fuel and paraffin, you are sorted. Paraffin, always ensure that it is what? Paraffin only, and it is used for heating or illumination. Then you can stay on the zero-rated list, and then you're good with that, right? So now, if ever now you ask me, for instance, that you should actually calculate somebody's taxable, what you call, their VAT control account, or let's say maybe you're supposed to actually state how much they're going to pay for that and stuff like that for this particular period. And also, guys, remember your categories of the VAT vendors. Remember your categories of your VAT vendors. Side quest, let me just do this here so that you guys remember on the side page. The categories. Remember your categories. Category A, category A, and then category A, that category B, and then the category C. And this must stay in the back of your head, guys. You can't be forgetting such things unnecessarily, This is like what, okay, there's 5 categories, but your main focus is on the main 3 actually right now, right? So you've got your category A, you know that income, or taxable income actually. Okay, not taxable income, but taxable supplies. Taxable supplies. And also, let me just say this, value. I hope you still remember the difference between value and consideration. I hope you still remember the difference between value and consideration. Right, in category A, for a VAT vendor, the value of taxable supplies must be what? Lesser than you guys are max of point. and you can talk. That's 130 million, right? And then also you've got another situation of what? Farmers with the thing, what you call farmers with taxable supplies greater than what? 1.5 million, right? Farmers with taxable supplies taxable supplies greater than 1.5 million. And that's all you need to know. And then you have to remember that category A is what? Odd numbered months. Just remember this odd numbered months. It's A, it's 1, it's an odd number. Category B, it's for what? Even numbers, even numbered months. Even numbered months. And then you are sorted. The thing, the information here for category A and B is the same. But the only difference is that now their tax period, their VAT period is actually everything also. Oh, let me 2 months also. Let me just say this. The VAT period is 2 months for both. The VAT period is 2 months for both. The VAT period is 2 months for both. And then this for category A, the 2 months actually, the 2 months period actually ends on what? On odd numbers. So it can be your March, it can be your January, it can be your May, July, September, November, and stuff like that. The uneven months and stuff like that. Then for the category B vendors, it will be your February, May, I think June, and then August and stuff like that until December. So you see, it's nothing complicated. Category A and B, same thing, literally. It's just the months that they actually end their thing that period. And then category C, it's that simple. The only thing that you have to remember is that what you call it, their period is monthly. Period. Monthly. The period is monthly. Then besides that, it's mainly for people that are earning more than what, which have a taxable income greater than 130 million, right? So value. And guys, this word value here, it's very important because whenever we go through this lesson, the lessons today, you will see the importance of this along the way, right? So value of thing, and value of taxable supply. Supplies greater than 30 million, right? And then that part, and then period monthly, or if ever other situations would be if ever now you are non-compliant, and they put you in here so that they are strict on you so that you are forced to actually do your paperwork more frequently and to be compliant, right? So non-compliant vendors, and then that's when how they deal with you. The other category is category D, which is for farmers only, and then category E, which is for specific companies and stuff like that. You guys don't have to worry about that for now. We are fine, right? So what you have to worry about is the zero-rated supplies and what type of questions that can actually appear here. Questions. And this is for all the scenarios, right? In the situation, what type of questions? Okay. Right. What type of questions can okay? One, be asked to calculate that payable or refundable. That payable or asked to calculate that payable or refundable of that particular person. If we ask for the journal entries, okay, the last question situation that they can ask you is to ask if the person should register for VAT. Then that's when you actually look at, now this is where this, seeing if ever now the value of taxable supplies are greater than 1 million and stuff like voluntary registration begins from 50,000 if every taxable supplies are greater than 50,000. It does not mean that if ever now you can actually, as a company, can make 3 million or something like that without it being compulsory for you to register for SARS. Even though they say the value for taxable supplies must be what? Greater than 1 million rand. So if ever now maybe you're supplying what you say exempt supplies and stuff like that, then there's no need for you to register for VAT in that situation, because there's no benefit for you to even enter in that situation, because your main items are actually VAT excluded, they're exempt the whole time. So you understand in that situation, and we'll see the calculation whenever it's time to see whether a person is actually a VAT thing supposed to register for VAT or not and stuff like that. So we see as we go along. Then journal entries, you guys know journal entries, but we'll do them along the way. And then also you'll be asked to calculate the VAT payable or refundable. Whenever you're calculating that, always start with your VAT output. Always start with your VAT output, and then what will fall afterwards will be your VAT input, right, which will be the one with the negative sign and stuff like that along the way. And always state your reasons why you are saying something is going to be at whatever rate that you actually charging it for. If it's going to be zero-rated, you can't just say zero-rated alone. You have to say zero-rated, because it is what? Zero-rated export of goods. Zero-rated what? You understand? So you need to state zero-rated because of this reason, zero-rated because of that reason, right? And then now going to export of goods and stuff like that. What can I say on this one? Think okay. Also, I forgot to also mention one thing on the export of goods. Let me just copy this and paste it here. And then on the export of goods, right, we need to also ensure that whoever now is exporting the goods, firstly, we need to ensure that you are a VAT vendor, and then you are supplying the goods to somebody else outside the country. And that somebody else that is actually outside the country, you are responsible for transporting these items to them outside the country. You must be the one that is responsible for transferring the items to them outside the country. And there will be two scenarios that you'll be faced with. Either you carry the items by yourself with your bag and go on to the airport or to the ship, whatever the case might be, and then you actually go outside the country with them, with those goods that you're actually selling them or selling, and then go and deliver them yourself to the customer. Situation number two would be you're like, I don't have time to go overseas and stuff like that. I've got work to do here. So let me just get a courier company to say, hey, DHL, come and take this and drop this off the overseas and stuff like that in Australia. So those are your situations that you'll be faced with. But now should it happen now that you are selling to somebody outside the country, but now there's a middleman along the way. And not only a middleman, but along the way, there's customer A over here. Now there's customer B here, or there's customer A, which you are there, who's the person that you're supposed to be selling to. But number B means the B here is the middleman, and then you are C. Now what can happen in this situation is that now you, as the main person that's selling the item, don't know that you're selling to this person. Or even if you do know, maybe let's say they're inside the country. That's a different scenario. I'll talk about that afterwards. But now you're the person that's actually selling this product. You're selling to B. When you're selling to B, what are you gonna do? You're gonna charge B the normal VAT rate, which is a default situation over here. And then once you sell to B, B will go and export to C, to A, right? So now they're the one that will actually charge the 0% VAT rate out there. And then whenever they get to the harbor and stuff like that, or the VAT returns administrator there at the airport, then they will tell them, oh, okay, fine, they kept the receipt, the proper paperwork that they were actually charged VAT on this particular item, also as well has to be the necessary documentation, and this has to happen within the 90 days before that particular item on the 90 days from the invoice date. So the item has to leave the country 90 days before the invoice date, or after the invoice date. After the invoice date, the item must have left the country. Then that's when they can be capable of claiming that 0% VAT rate. So now you see this is an indirect export. Direct export, you charge 0% immediately. But now if ever there's a middleman, you charge your 15% normally, and then this person will have to go and charge this person 0%. But kind B will be the one claiming that from SARS themselves. And they will be claiming that input from SARS, and then on the VAT output it will be 0, so they'll be getting their money back that they actually paid you. You would have also claimed your VAT input should it be that your items are actually the items were actually from the get-go we actually paid VAT input, right? So that's how the situation would be. So are we still together? Guys, please talk to me so that I know whether you guys understand what I'm saying and stuff like that. Or if you prefer me using the lecture slides themselves. No, I don't bite, guys. Oh, you got okay, my photos and everything is good. What about others? Okay, I think okay, fine, yeah, good, right? So now remember, direct export, you charge 0% VAT output immediately, and then indirect export, you charge 15%. And it can happen also at the very same time that you are selling to customer A, right? While you're selling to customer A, and they do show you that they're actually an international client and they've come to you, right? So now, if ever that's the situation, you also have two options. You either can charge them 0% immediately on the spot on VAT output, or make it zero-rated, or you can charge them 50%, and they'll have to go into the paperwork themselves. But now here's the catch. Should it happen that you charge them 0%, customer A, right? Let's say you charge them 0%, that's fine. But now you run the risk that what if customer A does not end up leaving with that product in South Africa and turn it into an export, or actually leave within the next 90 days in South Africa? So now you run the risk of you ending up saying this item was actually consumed in South Africa, and then you'll be the one liable for that 15% for the VAT. So now you see that you have to be wise up and be like, okay, charging 0% to a foreign customer if ever they're in South Africa is very risky. So you might as well just charge them that 15%. If ever they leave the country, they'll deal with the paperwork themselves. If ever they stay in the country, they're still fine because you've already taken the VAT output and paid it to SARS. So that's much more easier like that. So that's your situation on the export of goods. And then should it come to a thing also on export of transportation and stuff like that, same scenario and stuff like that. Interesting. And then also in the export of transportation and ancillary services, that one is straightforward. Like somebody, also reminder, who is the customer matters? Who is the customer matters, right? Because now, if ever now here, the person who's your customer over here, on the export of transport and ancillary services. Now, if ever your customer is actually a client that's in South Africa, you have to charge them the standard rate. But should it happen that they are a client from overseas, then that's when now you actually charge them the thing, what you call the zero rate. So that's also one thing you have to be careful of, whoever's paying you matters. It matters whoever's paying you. And then for gold, that's straightforward. Supply basic foodstuff, straightforward. Supply fuel and paraffin. Remember paraffin, as long as you're not mixing it with anything else, separated, right? And then now, if ever now you're asked to calculate maybe let's say that payable, I think I had. Let me just see if ever I can get those right. Okay. Actually, I can just create an example right now. So, let's say now we've got a wet vendor, vendor Mr. Let's see on the group. Let's see. Mr. Safafi, right? You've got Mr. Safafi, yeah. I'm sorry if I'm butchering your surname or name. I've got a vet vendor, Mr. Safafi. And then what do they have in this situation? They've got a situation whereby they run a company. Their company produces water bottles. Water bottles isn't the best example, but yeah, it's fine. Let's say the company produces water bottles. The company produces water bottles, right? So now, since the company produces water bottles, they have sales of let's say 50,000 for the year. Even if it's that's fine. Sorry guys about that. My phone switched off, so the UFS Wi-Fi is not doing justice for me. Oh Lord, come on. Even okay, yeah, I think you guys can hear me now. UFS Wi-Fi is not working for me. Sorry about that. It's not working. So I had to. My phone was switched off and stuff like that. So apologies on that. Okay. Hopefully, you can continue without any issues. Please give me a thumbs up if you can see my screen. Also, even trying to download a siphon to try and get the UFS Wi-Fi to work on Telegram. Okay, thank you, Mahoto. Perfect. Okay. Now there's no need for me to download this. I'll download it in the background, it's fine. Okay, as I was saying, the company produces water bottles, right? And then now what we have, we've got sales of 50,000, sales of 50,000, and then returns. Maybe let's say people actually return some of the products and stuff like that. Returns of maybe 5,000, or let's say 4,000 for fun. 4,000 for fun's sake. And then also at the very same time, what do we have? We've got people that are also on the thingy, on the cost of sales. Even though, okay, this one, okay, not say cost of sales actually, because now you have to remember one thing. The reason why I'm trying to avoid using cost of sales is that VAT is levied on the earlier of invoice or payment. And then once we have things such as cost of sales, the invoice and the payment has long happened ago on those inventory items that we have on the company. So cost of sales, they are irrelevant to our situation when it comes, especially when it comes to thingy, what you call to VAT, right? So what matters is the thingy, the sales themselves, all right? And then maybe the inventory that we actually purchased, inventory purchase, then that is something that we might be having at that particular point in time. Inventory purchases, which are in inventory purchases, let's say which okay, fine, we'll just leave them like this. And inventory purchases, then inventory purchases of inventory with the value of 20,000 was purchased from an international supplier, right? From an international supplier. And then also another situation, part of that inventory, okay, let's just say, let's leave it like that, okay, and then also stationery, stationery, I think I should put that. Okay, but then we haven't got into the stationery situation, but yeah, let's see. Okay, let me just say stationery. Good. Okay. Okay. Nope, I don't know. I use stationery. It won't make any difference. Okay, yeah. Let me just say do this once. It's fine. Then also on the thing on the sales that we had, 60%, and then also told that 60% of the sales were to international clients. Right? So 60% of the sales, not zero. 60% of the sales were to international clients, right? Even now we are given this information and stuff like that, and then we are told that our VAT vendor here is that it's Mr. Sefafi. The company produces water bottles. We had sales of 50,000 for the year, then returns of 4,000. 60% of the sales were for international clients. And then also at the very same time, we are told we made inventory purchases with the value of 20,000 from an international supplier, right? So now calculate, Mr. Sefafi. That's the question. So right now you asked to calculate this. This is your question one. Asked to calculate the VAT payable or refundable of Mr. Sefafi. What you're gonna go and do, it's gonna be straightforward. You're gonna say VAT payable or VAT calculation, and this is how you answer your VAT calculation questions. Then you go in and then say output VAT. That's what you start with. Output VAT at all times whenever you're in the situation for VAT, right? Output VAT output VAT. And then what do we have under output VAT? Now, output VAT, remember, it's the money that we actually received ourselves, so that's where we're going to be looking. We're going to be looking at the sales and the returns at that 60% of the sales were to international clients, right? So now let's start with the sales, right? With the sale, 60% were to international clients. It means that 40% were to local clients. So VAT is destination based. So now what we'll be looking at is that 50% is for local clients. So then let's just start with that 40%. That's for local clients, right? Sales, and then with the local clients, then sales for the local clients. And then your calculation would be, before even your calculation, you're gonna go and say you've got sales of the 40%, right? And then after that, what do you need to state is that what type of rate is it gonna be on, right? Even though we haven't talked about standard rate, but a normal sale on standard rate, right? Standard rate. Then standard rate. Then you can say normal goods. Basically, your true explanation would have to state that item is not zero rated or exempt. That's why it's a standard rated item. So that would be your scenario. Then standard rate, and then immediately after that, put in your calculation over here. And then you're gonna go and say that 50,000 that you had over there, had your 50,000, then multiply it by what? By what? Our 40%. So it's gonna be 0.4. Or you could have said 40 over 100. That's up to you how you do your calculations and stuff like that. Let me just do it for this sake. Times 40%. And then after you times it by the 40%, then you multiply by what? By your tax fraction also at this particular point in time. And then you go, our tax fraction for this is going to be 15 over, I think what you call 115, right? So 15 over 115. 15 over 115. So this would be your normal calculation in this scenario, right? And then now, whenever you're writing your things here, you always say maybe output VAT here, and then also here at the very same time, you're gonna go and put in reason or calculation, so that you can actually have a place for everything that you're actually doing things in, a space for everything, and then you're gonna put in amounts over here. Even though you could have put in amounts and reason above. Just say here. Amounts, right? Then you've got that in here. Then now with your amounts, what do you have? Got your what? Your 50,000. 50,000 multiplied by 40. Multiplied by 40%, which is 1.4. And then after that, you're gonna multiply that itself, what you call with 15 over 115. Because now this is what this is a consideration. This amount is consideration itself, right? So that's going to be a very important part, right? Then got sales of the 40%, and then also now at the very same time, what part of the other sales was the 60% part of the sales was what was for external items and stuff like that that went to that were exported to right to other clients from outside the country. So now what we'll do, very same thing, similar situation, sales. Then you put in that sales for the what for the 60%. And then what is this? Okay, let me just say 60%. Or sales 60%, even if you just write it like this. And right on the reason part, you're gonna go and say, okay, for your reason, it's what? Export. On your reason, you're gonna say zero rated good. Then once you state that it's a zero rated good, you state why do you say it's a zero rated good. And then you're gonna go and say export or zero rated supply, and then you go and say export of goods. Right? And then you put that reason in there, and then also again your calculation down below, which is literally the same thing as this, but not the same actually at the very same time, right? Which is gonna be this. But now this time around, we're changing from 40% to 60%. And then instead of using 15 over 115, you're going to say 0 over 115, right? Which is the same calculation that we have here. Just copy and paste that in here. And paste that in here. Oh, sorry. Okay, and paste that in here, but we're only changing from 40% to 60%, and then also they're using what? 0%. So we are charging 0% rate, and then you do insert your zero over here so that everything is clear and concise, right? And then always make sure that what else? Now you once you're done with your output VAT, and then you also have to go and check you had returns over here, because someone will ask, okay, what if somebody returns the items and it already charged VAT output? You don't worry. Say it's not your problem. That money will be solved by SARS. All you have to do on your side is to take your output VAT and input VAT and then mix them up together and find the difference to either know whether SARS owes you or you owe SARS. If you owe SARS, you better pay them as soon as possible. If they owe you in the VAT control account, and let's say maybe your VAT input is actually greater than your VAT output, the crazy part is that SARS can take up to 5 years from the date that you filed your VAT 201 document. So it can take up to 5 years for SARS to pay you your money back, right? But on your side, they want it now. So as Mr. Was it Shabib or who it was, they did say, pay now, argue later, to make your life simple. Because if you don't pay now, the penalties and fees that SARS will charge you is going to be a lot. And please, guys, tell me, those of you who know, how much is the penalty for not paying SARS? The rate. Come on. You can type on the group if you desire. Come and ask if this lesson will be recorded. Yeah, the lesson is recorded. Can you make an example where? Oh, you see, lively rebel. Yeah, yes. Amen. Yes, the rate is going to be 10%, but not 10% alone. Plus the interest that SARS is going to charge, right? So plus the interest that SARS is going to charge. So the interest rate will be based on them. So it's this 10% penalty, and then okay, I'm gonna do right now. I'm gonna make as if pretend as if this person doesn't pay SARS, and then how it actually deal with that. Yes, 10% plus interest. The interest rate will be on the discretion of SARS. They can charge you 50% or something like that, an extra maybe extra 2%. It's up to them, right? So there's that. Okay, fine. We'll do the whole example, this example, and then pretend as if the person actually ended up having an outstanding VAT output and stuff like that, which SARS was payable and they did not pay, and so that you can see the situation as it happens. Okay, fine. Sale 60%, and then it would be 0% over here. And then what else do we have? And then the returns of what? 4,000 and stuff like that. If ever now there's people that are returning items, you don't have to worry. That item, it's no longer part of what your output VAT now. It's now gonna be input VAT again, because now this person is returning something to you. So it's as if you are buying the thing back yourself, right? So the returns are going to be there on the VAT output, VAT input. So that's fine. It's a reversal of the VAT output. Makes no difference. And then inventory purchases with the value of, and remember the wording is important. We are told here inventory with the value of 20,000 as purchased from an international supplier. Now I'm asking you now, guys, if ever we are buying something from an international person, do we get charged VAT on imports? On imports, do we get charged VAT? Okay, Millicent. Yes, thank you, Millicent. Anam, thank you. And then, Millicent is still typing. Let's hear what she's gonna say. Okay, as we wait for Millicent's thing respond. But now, how do you know that those returns were from international or local, or will it be stated as such? Interesting question. And then since Texas, okay, yes, okay. Now, how will you know that? Now, it's very easy. It's not that difficult, right? The whole point is whenever you're filing a VAT 201, you have to prove that this person that you're actually even saying they're an international client and you're charging thing what you call you need to charge 0% VAT output on them. You need to go and show to thing what you call the VAT returns administration at the airport, right, and file your paperwork. So now whenever the product returns, it will also still go through customs there. And once it's going through customs, then it will be stated with, oh, okay, this item is actually directed to so and so and so, and it is still that very same item. So the documents are very important. That's why you would also need to take the documents whenever now you're going to file your VAT 201 to say, hey, sorry, that I paid you, my guy, and that person came back and asked for a refund now. So I want my money back. You understand? So there has to be that section. The documents are very important, right? It's you, and it is at the discretion, or it is the responsibility of the VAT vendor to let SARS know how much they owe and how much they need to pay and stuff like that. It is your responsibility as a VAT vendor. Going the that's how you know. If you know, SARS the remember, yeah, very important to confuse the consideration. Plus, if it's very is alone, it's not amount. So now in the international the ones that are importing the item. If we are the one importing the item, then we'll actually pay VAT since it is destination based and we are in South Africa consuming an item that is supplied, right? So now we're gonna go into the VAT output section. VAT output section. Go and see. Go to the purchasing. And say, okay, so eventually purchase outside, but it's rated situation. Rated, and then rate. Because not that not zero and user say we are fine. 20,000 calculation will be your 20,000. Let me just do this 20,000, right? And then multiplied by 20,000 multiplied by 100 or 15 over 100, right? So now you do also take note of the change that once you are using fail, you always stick to 100 and then everything is fine out here. But if it's consideration, you would have used the 115 as the base. So always know it's fractions, and then you won't be confused on what to do and stuff like that. And then also over here, eventually then you go and say, okay, fine, that's 20,000, then multiplied by that 15 over 100. And then you've got that sorted, you've got that VAT output. And also do not forget the brackets in there to remind you that this is a negative amount, right? It has to be what SARS owes you, and this is what you owe SARS, right? And then also at the very same time, you've got remember your returns that actually happened. Even though in this situation we didn't state which were these returns and stuff like that, you can choose any of the two, right? So, but to make things more interesting, let's just say it's the ones that were from SA, right? So that whenever they get returns, they get returned, it's still gonna charge you your VAT input back and reverse it, right? So you can say returns, and then got your thingy. Your returns will be standard rated. And then now you can actually even start maybe you can even state that in this situation this will be standard rated because now that output was paid. Right, since you did pay that output on it, then you can claim that input on it. It is a taxable supply after all. So you can be fine with that and then do your calculation over there, which is gonna be that 4,000. I'm just write 4,000. And multiply it by what? It was actually on the what? On the consideration, that amount. So which means we're gonna be looking at 115 over 115. Then we've got that sorted. Negative sign, then you've got 4,000. Multiplied by 15 over 115, right? Hey, not 115, 100. Oh, actually 115, sorry. And I made a typing error over here. I said 155. Okay, and then you've got that. And then also, obviously, then at the end of the day, you're gonna be having a situation where it's VAT payable or VAT refundable. So VAT payable or refundable. Then if ever it's VAT, then you just go and sum up everything over here. Then you just do this. Then we've got thingy SARS owing us 913,000, right? So we've got that situation. But somebody asked, what if now SARS was owing us? What would have happened, right? So now let's just do that situation and make an assumption that this was not 50,000, it was actually 100,000, right? So now we are the ones that actually owe SARS in this situation, and we do not pay immediately in that very same time, right? Then we're gonna end up having what? A VAT penalty. Then with that VAT penalty, that's gonna actually okay, don't mind my typing here. With that VAT penalty, the VAT penalty will be charged on the amount that you are actually owing. It will not be charged on the what you call on the taxable supplies consideration itself, but it will be charged on the amount that you actually owe SARS. So now whenever they say they're gonna charge you 10%, it means that penalty will be what you call will be this amount. Yes, okay. And then what I do to you, what I do in the situation, it will be that will charge that here's the VAT payable over here, and then they take the VAT payable multiplied by 10%, right? So I'm gonna write 0. Okay, let me just say 10%. 10%. Let me do this. Yeah, it's gonna be that 10% over here plus whatever rate that charge, interest rate that SARS chooses to actually charge you, and that interest rate will also be based on how many months and stuff like that have you not paid them and stuff like that. So they'll keep on charging you that every single month. I think every single month, if I'm not mistaken, I'll double check. I think it's every single month that they'll keep on charging you this interest. Because the main reason why they're making sure that they charge you this interest, or it's either every single month or every period, it's for them to ensure that you pay as quickly as possible and do not result in delaying them. So now in this situation, let's just say maybe they add maybe 5% for month period number 1. So assuming that it's charged on every period, because I literally forgot about on the period and stuff like that. So it's going to be plus 5%. Plus 5%. Okay, fine. So now your interest, now you would have the penalty of 250 rands per month for this month, right? So since you have been charged on what? On 15% of the whole amount. Then now your total debt that you actually owe SARS now at this point, it's what? Now it is what? This amount, which was your penalty, plus the previous amount from the previous month, right? And then now on the next period, if ever you have not paid again, they will charge you again penalty. They are ruthless. Don't play with you. And now the penalty now will be charged on the current amount that you are owing SARS, which again will be that this amount multiplied by 10% that they'll be charging. And then with that 10%, right, 10% plus what you call the other percentage that they'll be charging. Maybe this time around, okay, this person is taking forever to pay us. They're increasing the percentage of interest by 7%, right? So now you see, now this amount will keep on increasing and increasing, and you might find that after 10 years or something like, or if not even after 10 years, actually 3 years or 5 years, you might be actually owing SARS close to 20 times the actual amount that you are supposed to owe them, that you are actually owing them from the very get-go, because they charge you very frequently on every period, and they make sure they won't forget. And they might not know how much you owe them, but once they know, you owe them, you understand? So it's something like that. So it's better to pay up as soon as possible. Are we good on that? Okay. Assuming good. I hope you got answered. Was it Rebel, Lively Rebel? Hope you got answered. And then also your channels would be the same thing. Just increase your liability to SARS, and then which is your credit that amount, and then you'll have to debit your expense. Your expenses, which it's gonna be VAT. In this situation, let me just do this. And the penalty, just do this. You debit your VAT penalty, and then you credit what you call your SARS liability. SARS liability. Or you could have literally said, instead of using SARS liability, because it's for the penalty, I wanted to separate it. Or you could have literally said that control account, it's up to you. Because eventually it goes there afterwards, so it makes something different. And then you would have used this particular amount over here. Then you would have been fine. This would have been your journal and stuff like that. Same thing over here, your sales journal. Okay, since you ended up using 100,000, you would have said, but you guys know your sales, man. It's gonna be what you call thingy. In the situation, you debit bank. In the situation for the 50,000, you debit bank with what you call with the okay, you ended up using 100,000. Don't just say to make things easier. You debit your 100,000 here, debit bank, and actually it's not going to be 100,000. Sorry, you debit your bank, then you say debit again, and then you go and say credit here, the sales. Credit sales. Then in the middle, always in your channels, whenever you do a channel that has VAT in it, and you don't know which side you're supposed to go, whether it's going to be a debit or credit, just always make sure that you put your VAT in the middle. Always make sure that you put your VAT in the middle, right? So that it makes your life much more easier, and you will know what to actually use and stuff like that, whether it's a debit or a credit, so that you don't actually get confused, right? So money will be coming into your bank account. You got your sales happening over there, and also again, your statement of profit and loss. The items that go there, they do not have VAT. In your profit or loss, the items that are there, they do not have VAT. Always remember that they do not have VAT. So now in the situation, you know that, okay, fine. Even though, okay, I don't know where my sales will be. Let's just say you don't know your VAT control account where it will be. Even though this would be VAT output or VAT control, that's up to you, right? And then over here, what we are receiving in the bank account is going to be that 100,000. Fine with that. Then also at the very same time, you've got your sales over here, which is this, multiplied by 115, actually 15 over 115, right? Oh, sorry, actually 100 over 115. 100 over 115. And then now your difference, you can see what it's this, less this, then you're sorted. You know which side it's gonna go. So you don't always need to stress, hi, where's my VAT control account gonna be? Is it a debit or a credit and stuff like that? And always also again, what I'd always advise is your VAT, it is always the opposite of bank. Just always assume that your VAT is always the opposite of bank, and then it will make your life easier. Your VAT is always the opposite of wherever the money is. It will make your life easier, even when it comes to thinking maybe your income tax is none. Income tax is always the opposite of where your money is going. If there's an inflow of money, you know that, okay, you credit VAT or tax. If there's an outflow, you know you debit VAT or tax. And then you're sorted. Right? Hey, sorry guys, I'm being slow over here, but yeah, let me just try to finish up within the next 30 minutes and stuff like that. And then what else do we have? And then maybe you might be asking a situation where maybe you ask, is this person actually a VAT vendor? Should this person actually register as a VAT vendor? Right? So now the fact that we've actually calculated those items, right? To now assess whether this person would be a VAT vendor or not, let's just go into the situation here. I'm just gonna say that I'm just gonna write here value. This is very important, right? So now they ask, for a person to register as a VAT vendor, the amount of the items that they are actually supplying to the people, their value has to be beyond 1 million. Now, in this situation, this is how we go about the calculation. You see here, the items that this person actually sold over here was 400,000. But what amount are we going to actually include whenever we're calculating whether they're a VAT vendor or not? It's the amount that you're going to go and say, you want the value. We want the value. So now you're going to say 100,000 multiplied by what? 100 over 115. So this is the amount that would contribute to them actually into them, whether they meet the definition of the person that's going to be a VAT vendor or not, right? And the criteria on the threshold of 1 million. So they've got 89,000. Hey, what happened here? Okay, this is 1 million, right? Fine. Then we've got that. And then now on the zero-rated item also, again, you can ask yourself, on that 60% that we actually, I forgot to multiply by the 40%, right? Times 0.4, right? Fine. That's 37, right? That's fine. But now when it comes to the 60%, you can ask yourself, okay, this item is zero-rated. So are we going to do the same thing or not? And your answer is yes, you're going to go and do the very same thing. Even though the item is zero-rated, you're going to go and say, okay, just wanted to copy the formula, but then it's fine. Going to say it's still zero-rated, yes, but it's part of the what? Taxable supplies. That's why it's very important to know what a taxable supply is. Zero-rated and standard-rated. Exempt supplies are not taxable supplies. They are non-taxable supplies. So that's where you need to separate. It will help you in calculating the value of the items, whether the person meets the criteria to be actually registered as a VAT vendor or not. Right. So now I've got 100,000 multiplied by that 60%, when 60%, then multiplied by that 100 over 115. And then you're good to go. Right. So now this is the amount that you're going to be actually including in the taxable items and stuff like that. Then if ever you're going to go down here, again, inventory, but on the negative side, then you've got your inventory over here, the taxable supplies, right? Then you've got inventory returns over here and stuff like that. Okay, that's fine. Here you're going to put in the 20,000. Okay. And remember, what is this? This amount, this 20,000 was what? Was the value. So already we are dealing with value on its own. So now this is a standard item, standard value items. So now you just put in the 20,000 as it is, instead of you having to go and do any calculation, because we are using the value here. It was consideration. Here it's value. Same thing again. This 4,000 was what? It was from what you call it. It's from a consideration amount. So now since it's from a consideration amount, please make sure it's that 4,000 multiplied by that 100 over 115, right? So this is how you do your calculation. And then now all throughout over here, while you're doing your calculation, let me see. Okay. While you're doing your calculation over here, then you'll find the amount, which is what their taxable income. Let me just write it here. Taxable supplies, man. Taxable supplies. Then now you'll find the amount for their taxable supplies, and then you just sum everything up there. And then you find 63,000 what. This person, yes, they can qualify to actually apply. Then in your question, you would tell them that yes, this person does qualify to apply to be a VAT vendor voluntarily. They can apply to be a VAT vendor voluntarily. And remember, VAT vendor, then once they are a VAT vendor, they'll be on the thingy, on the invoice basis, and then you can actually start working from there, right? But now, should it also happen that they want to become a thing, maybe they apply to be a VAT vendor, but their income for that year, let's say, what's the situation? If ever they, okay, maybe let's say they apply to be a VAT vendor, but their income, taxable income is less than 50,000 at that particular point in time, what are you gonna do? You're gonna ensure that their company is on the payment basis. Remember the accounting basis for VAT, there's payment basis and invoice basis. So you always have to ensure that if ever the thresholds, their amount, taxable income, taxable VAT amount, or taxable supplies is actually lesser than 50,000, they're on the payment basis. But should it be greater than 50,000, then they get transferred to the invoice basis, right? So I hope you're still good on that. I'm gonna finish now, James. Okay, there's no extra question. And then, okay, fine. And then this is how this is how you calculate whether a person, the value of their taxable income is actually greater, or they should compulsory or not compulsory apply to be a VAT vendor, right? So we do see that if even looking at this whole situation, even if these items, this was a million rands, even if I had actually said this is a million rands and actually used the million rands over here, right, instead of 100,000. Yes, the sale is for a million rand, but is the taxable supply a million rand? And this person would have still not, even though they would have earned more than a million rands in terms of the sales, but now the taxable supplies would still be less than 1 million rands. So they can still apply to be a VAT vendor voluntarily, not by force. Are we still together on that? So we've got your accounting transactions. You know your accounting transaction. For returns, it's just the opposite of this. Inventory, same thing. Just there you just do what, as I said, you just create your inventory. So it means your VAT will be on your debit side, and then you debit your inventory, debit your VAT control, and then credit your bank over here for this. Then returns, it will depend on the returns. They return the money also as well, or what? So that's another situation, right? But we'll just make an assumption that we had to return the money to them. So we'll just have to debit bank, and then our debit returns and stuff like that, and then credit we'd actually have to debit inventory, sorry. We'd have to debit inventory over here. And then also even reverse your sales also. That's for transaction. You remember the sales transaction that you'd have to go and reverse all of that. So debit sales, credit thingy, what you call. It's gonna be debit sales, debit VAT control, and then credit bank. Because now you're giving them their money back and stuff like that, unless maybe they ask for it to be repaired, the item to be repaired and stuff. So that will be that situation, and then we are sorted. And then, okay, fine. I think we are done with, what was I talking about? Okay, it was zero-rated, right? And then you are on export items. And then after export items, okay, we did talk about everything on the zero-rated situation. Once I'd ask if a person is registered for VAT journal entries and to calculate VAT payable and stuff like that, and then you are sorted categories, done that. I'm gonna try to be a little bit fast. It's almost 10 o'clock and the library is closing, guys. And then also another situation that you'd be faced with is having to deal with what you call VAT exempt items, VAT exemptions. Okay, let me just leave that like that. VAT exempt supplies, right? And then VAT exempt supplies, if ever, also I need to clarify this, if ever you produce VAT exempt supplies, you cannot claim VAT output, you cannot claim VAT input. That's that. But now, if ever you produce VAT supplies that are zero-rated, or let me just say taxable, so you produce VAT supplies that are taxable, which is zero-rated and standard-rated, and some of your inputs on your products for you to go and produce that particular item was an exempt item, which means you did not claim any VAT from it, right? And then maybe a portion of the thing of your raw materials that you are using to actually produce your item maybe was a taxable item. You can only claim VAT input on the items that you paid VAT input for. For the portion that was exempt, you leave it like that. You do not claim anything. But your supplies, if ever now your supplies are actually taxable supplies, that you can actually go and actually and I mean, you go and claim your, you can actually go and claim your VAT output and stuff like that. You can actually go and pay the VAT output. It's fine. You can charge the VAT output and leave it, but you can only claim your VAT input on the items that are taxable supplies, right? And it can happen sometimes that you're a business, maybe let's say you are a baker and stuff like that, and your taxable supplies are zero-rated. So it means that the VAT output that you charge your customers is actually zero-rated output, right? And then, but on your input, whenever you're buying your flowers and other things like that, most of your things will actually have VAT input, which is going to be taxable at the standard rate, right? Now, with that taxable rate, you can actually look at it from a perspective that if you're a baker, most likely than not, your VAT input will always be greater than your VAT output because of the way your products are supplied. Because your VAT output is always 0%. Always 0%. Okay, I'm not talking about exempt supplies, John, 0%. And then also now your VAT inputs, majority of them, they actually are charged at the standard rate of 15%. So 0 will always be great, 15 will always be greater than the 0%. Right, so think about that even whenever you're starting a business, what type of taxes or VAT you'll actually pay and stuff like that. Something to consider whenever you're doing business, right? Okay, VAT exempt supplies. You've got financial services. You've got financial services. Financial services, guys, these items are just money. It's like the exchange of money. You are not literally doing anything. You are not providing any value. You are not doing anything. You are not supplying any good. Also, you're just exchanging money for money. So you go to the bank, you go and take your money. You are taking your money. Oh, there's nothing that has happened. You go to the bank, they give you a loan. They're just taking money. It's an exchange of money. There's no transaction that's really happening there. They're like, okay, here's money. There's no supply of a good one, stuff like that, right? But at the very same time, the fees, the service fees that come along with that, you get charged VAT on that. So I hope we are together. You are being charged for the service. You are being charged VAT on the service fees, not on the money itself that you actually borrowed, right? Or the thing in the bank borrowed you and stuff like that. So that's why financial services, VAT exempt supply, right? So even the interest on financial services, if ever you took a loan, there is no VAT on that. It's like exempt. They're like, it's fine. And also have to look at it from a perspective that the exempt supplies, those are the items or situations whereby the government actually promotes those activities. They're like, hey, I like these things, do them more. I won't charge you anything. Even though, okay, the input side is not a nice side to be in, but government is kind of like saying, do these things more and stuff like that, right? And then also you have got residential accommodation. Residential accommodation. Residential accommodation. So now, since you've got resident, okay, don't mind the typing and stuff like that. Residential accommodation also, it's a VAT exempt supply. Where you are staying right now, most of you are staying in student accommodations. If ever a resident, an accommodation or a place is used for dwelling in it, if ever it is used for dwelling in it, and its primary purpose is to actually, for you guys to stay in there, for people to actually stay there as if it's their home, then you do not actually get charged VAT on that. Right. So you do not actually charge a VAT on that supply if you're having a student accommodation and stuff like that, or you're having a house and you're renting the house out. You might have a house and you're renting it out to somebody else. That's fine. Right. But if ever now you are renting that house to someone else, it's zero, it's exempt. Yes. But now also at the very same time, the interesting part is, remember that you guys are, I think I forgot to actually include municipalities on the zero. Yeah, I forgot to include municipalities here. You see now, yeah, municipalities. I forgot to include municipalities. Municipalities, because it's due to the example that I'm trying to make, it requires municipalities, and municipality items are zero rated, especially the rates and taxes, right? And okay, let me go back to my example. Now, on that residential accommodation, you have a house there at home, and then you're renting it out to somebody else. On your rates and taxes, you get the municipality has been charged 0%, right? So you, as the person, you have paid nothing there. But now you, since you did say rent alone directly has no VAT, as zero is exempt. But if ever now we are paying rates and taxes, you can go and charge the rates and taxes directly to the tenant on their own, include it in their rent money, and charge it at the standard rate of 15% for you to actually recover the amount that you actually paid to the municipality. Are we still together? Did we get that part right? The part that if ever residential accommodation, you have got a person staying in your house, and that person staying in your house, they pay rent. Rent itself is an exempt supply for a dwelling, a residential accommodation. Itself is zero, it's exempt. Then you, as the owner of the house, the VAT is being charged on you to say, okay, fine, come and pay your municipality rates and stuff like that. Municipality rates and taxes are zero rated. Yeah, like, okay, fine, I've got no output VAT there, it's zero rated, but you did pay them, right? You did pay the rates. And then now, after you've been charged the rates, you come into your client, to your tenant, and be like, okay, on the rent that you are paying, I'm going to charge you 15% standard rate to recover the money that I spent on the rates. But if ever now you're not paying your rates and taxes, you cannot be now coming to say on the tenant, on their rent amount, that they should actually give you 15% extra, because now that 15% extra, you cannot charge it on what? On an exempt supply, which is residential accommodation rent. Unless it's for, you can charge unless you are charging the 15% for your thing, for your municipality rates, and look at it from a perspective that it is actually your VAT input that you are getting from your thing, from your tenant, and then your VAT output is you actually getting the money itself you're paying at something like that. Then okay, they also commercial components. Those can be all can be um, put them, they're not concentrated. As long as people now, let me just do this. You look at to the frequent receive supplies from an supplier. It's residential accommodation for people to stay, but now frequently that the skin and stuff like that. BNB, so it would still be fully under thing to call commercial accommodations and stuff like that. If ever now you have flats and stuff like that, and there's certain items that you have to go in and out, and you have to provide cleaning services for the flat, and you know which okay, no, this thing is actually a thing, a commercial accommodation. So look at what the place itself is used for or primarily used for, so that you can determine whether it's a commercial or residential accommodation, right? And then when it comes to residential accommodation, commercial accommodations, I will get onto that later once we are on income tax directly. When we are talking about Boma section, I think it's section 16 sex or something like that, erection of houses and none. We get to that later on during the year. Don't worry about that for now. And then what else do we have on exempt supplies? And then for exempt supplies, you've got transport of fare paying customers. Of fare paying customers. So for transport of fare paying customers, and then you've got three situations. You've got transportation by road, right? And then you've got transportation by railway, and then you've got the last one, which is going to be by plane, right? By air. It's just going to use plane, right? And then you've got a portion of this, it depends on the situation, but there's a portion of this that is zero rated. There's a portion of this that is exempt. There's a portion of this that is standard rated. Standard, right? So now you have to ask yourself, okay, now am I transporting fare paying customers by road? If ever now we are transporting fare paying customers by road, then you're like, okay, fine, this thing is exempt. You're like, yes, right? Fare paying customers by road, those people are exempt, right? Yes. But now, if ever now we are transporting somebody outside the country with the car from SA, in that situation, it's not as an exempt item, it's actually a zero-rated item. Since what did we say? Exports, zero-rated always, right? Let me just say exports here. And then here, I'll just say by road, export in SA. Here in SA, I'll just say in SA, exempt if ever the transportation is in SA. And then here, the standard one, I'm just going to write for you Uber, for instance. If ever now you're riding on Uber, Uber, it's a car company and stuff like that, you are going to pay VAT on that, right? So you need to look at it from that perspective. Uber, you're not a fare paying customer at that particular point. It's like a luxury service. It's not a taxi, right? And then also by rail, if ever you're traveling by rail to outside the country, if ever you're moving to outside the country, it's an export, it's zero rated. If ever it's going to be in SA, you're traveling by train in SA, it's going to be exempt in SA, right? In SA. And then if ever now you're traveling in a rail, maybe let me say Gold Reef City. Let me just say Gold Reef so that you'll remember Gold Reef. I'm trying to finish up. If ever it's in Gold Reef now, you're riding a train in Gold Reef City. That's not a normal train. You're not a normal fare paying customer. So you'll be charged VAT on that. You understand? And then with planes, if ever it's a plane going outside of South Africa or inside, exports and imports, zero rated, / imports, zero rated, right? If ever you're going outside or inside the country. But now, if ever you are in SA now, you're traveling by a plane, you're living soft life, moving from Gauteng to Cape Town, the traveling 12 hours, no, services. Ibo. What is this doing? This method does not need to be hit. Okay, educational services by the state. The state. Actually, let me just say this. Any educational service by the state, whether it's government school or what, or it's a university, college, those things are zero rated. And any service that is offered by the university itself, which is paid for by you as a student in the form of tuition fee, it is also at the very same time exempt, right? So educational services exempt by the which are then given to you by the thing by the state and stuff like that. Universities, colleges exempt. Tuition fees in jail. Let's just say anything that ends up being called a tuition fee, it is exempt. So you must always know that. And then what else? If ever there's any of the items you might think of and stuff like that does not fall under these exempt supplies or the zero-rated supplies, then it is standard rated. So you guys don't have to crack your head about it and stuff like that. So what I'd recommend right now is for you guys to go to the thingy, to the to your slides and stuff like that. Then once you get to your slides, go through those slides, even though you can scan through because I've covered everything that's in there. You can go and scan through those slides and stuff like that. Once you've scanned through them, do all the exercises that are in there. And then I'm gonna avail myself maybe for some of any questions regarding VAT supplies for maybe until Friday or something like that, because I don't respond immediately most of the time. And then, but everything that you have, it's actually everything that we've done here. For this, the value when it comes to what you call tax supplies, VAT payable or refundable, when it comes to the amounts that you're supposed to pay to SARS, right? And then what was the last one? The journal entries. Your journal entries are here, even though I didn't do all of them and stuff like that. But then it's that, right? Even returns will be what you call debit sales, or returns will be up to you what you're gonna put in there. With control, and then you go and you credit your bank because you have to pay them back and stuff like that. Then your inventory, this one, the purchase of inventory, this one is straightforward. Also debit inventory, and then debit also back control. Don't mind the spelling. Back control, and then you go and what you call credit your bank, and then it's shy. You're sorted, right? So now there's nothing that you now don't know about VAT supplies. You've got everything covered. I think I've got everything covered. And any questions? Because I've been talking this whole time. And I've got 5 minutes in the library right now. Any questions? If ever you want to speak, please unmute your mic first before you speak, because I can't hear anything. Or any recommendations or whatever that might be. Or you can just write your recommendations on the group, and any questions that you guys have, you can write them down there on the group also as well. And then that's it from me. Thank you. Have a great night, guys. I hope this was a fruitful lesson and you guys enjoyed. Thank you. Sibonke.